The Federal Reserve today made its final call on interest rates for the year, and it could be a look into what they plan for next year. Karen Caifa has more.
For a third straight meeting, the U.S. Federal Reserve opting to hold interest rates steady. The Fed had fresh inflation data from both the consumer and the producer side to consider, and it is clear that going into 2024, they'll have to continue to walk that fine line between policy that cautiously slows hiring and spending, but doesn't completely stall it.
The U.S. Federal Reserve charting a steady course amid promising economic data heading into 2024.
Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully.
Fresh data from the U.S. Bureau of Labor Statistics showed inflation continued to cool year over year in November. That means price hikes have slowed at the grocery store and elsewhere, and households have finally seen some relief. But prices remain higher than pre-pandemic levels. And Mark Zandi, chief economist at Moody's Analytics, says that leaves consumer reaction mixed.
Lots of things that people buy, from food to rent to gasoline are up from where they were a few years ago. So I think people are still uncomfortable with that, still trying to digest that.
Still, the resilient economy with a steady jobs market and wage growth outpacing inflation has investors feeling bullish about 2024.
They expect the economy to continue to grow to avoid an economic downturn, and they're starting to anticipate interest rate cuts by the Federal Reserve, not next month, but by middle of next year.
Despite the Fed's plan to keep interest rates higher for longer, there is hope that the Fed's benchmark rate, which is currently at a 22-year high, may soon come down earlier than anticipated.
As for how this decision impacts consumers, it's not a lot right now. Consumers will still feel the impact of the previous 11 rate hikes since March of 2022 as they tackle credit card interest payments and seek car loans and mortgages. In Washington, I'm Karen Caifa.